Hi, everyone, and welcome back to the DogCo Secrets podcast. I am your host, Michelle Kline, and I am also the founder of DogCo Launch, where pet care companies come to grow and scale. I have a super tactical episode for you today because we are talking all things numbers. Hang in there with me. We are talking about how to set yourself up for financial success. I have 10 really tactical tips for you today. Some of them are really practical, some of them are more mindset oriented, but we are going to get into all things money today. So let's get into it. So when I first start working with a business, there's always the first elephant in the room, which is, how are your finances? How is your revenue? How is your net profit? And I know money can bring up a lot of feelings, especially it can bring up fear. It can bring up shame. I feel like I should naturally be better at this. I should, that I should feel like I know what I am doing. And I just want to peel back the curtain for you. No one knows what they are doing when they first start. Many of us struggle along the way. If you feel sometimes you look at other people and you're like, man, they have it all figured out. They really got it. They don't. I promise you, we all have stuff. And for many, many of us, money is one of those things. So full disclosure, am fascinated with money. That came out really weird. Okay, I have always been fascinated by money management. Let's do it that way. Money's great, and of course, I want to make it. I want all of my clients to make a lot of it. But I have always been fascinated at what makes money management work really well for some people and be really, really difficult for others. And I'm really thankful to have grown up in a family where we talked about money a lot, and we talked about mindsets with money and tactics with money. And as such, I would not say I am perfect at by any means with money management. However, I am very practiced, and it is something that I think about a lot and work with clients about quite often, because when this becomes this hurdle in your business that we can't seem to break through, we're running up against this wall, maybe it's triggering a lot of emotion for you, it can be so difficult to take any of the next steps with your business because this ends up becoming a bottleneck that we just can't take good strategic steps forward if we don't know the basics at a minimum of your numbers. So let's get into 10 tips to help you win financially with your business. And, some of these will apply to your personal life too. So a good double bonus there. Now that I've said that, this first one is actually for your business. It is time to hire a bookkeeper if you do not have one. If you have worked with me or you have listened to any of my content, I don't do a lot of shoulds. Not a big believer in them. I feel like the perk of entrepreneurship is that you are building what you want in the world the way that you want it to be. And I'm a huge believer in that, and I will champion that all day long for my clients and for the people that I work with. However, my caveat is the bookkeeping is, in my mind, one of the highest leverage things that you can outsource for the information and strategic insight that it gives you back into your business. It is not a very high leverage use of your time because it takes a long time to learn. It can be very complicated. And that is not to say you can't do it. You absolutely can learn how to do your own numbers. I work with clients who have done their own numbers for years. But if that is a barrier, please just hire somebody. I have phenomenal recommendations. I will put a couple in the show notes of who I recommend for clients to work with. Please just start working with someone. One thing that I tell people is if your defense response to that was, well, I don't know if I can afford to work with a bookkeeper, that means that you cannot afford not to. Because if we can't make that strategic decision, it means that we don't have enough insight into your numbers. And there is no way we can make this really good strategic call about your business, about the thing. Should I hire a manager? Should I grow this service line? Can I afford to do this? How much can I pay myself? How much am I going to owe in taxes? That is all going to be things that we can figure out from you having up-to-date bookkeeping. that's tip number one. Hire a bookkeeper if you don't have one. If you feel really confident in doing your numbers and that is not a huge time investment for you, then keep it. I'm not saying shake things up if they're not broken, but if you're like, I'm resonating with this first step already, just do it. I'll put some great names in the show notes. If you're a pet care business that wants to level up, then this is for you. The DogCo Business Summit is in Winston-Salem, North Carolina, September 26th to the 28th. We still have tickets available, and we just announced that we are going digital. So you can get your in-person ticket or your digital ticket at dogcosummit.com. That leads us directly into number two, which is to take the time to learn how to read some basic financial reporting. Profit and loss statements are really important. They are what give us the guide forward into the work that your business is demanding of us, into the work that your business needs. So I used to offer something called an on-site where clients would fly to North Carolina, which is where I am. We would work together intensively for a couple of days, and I always would start this service by sitting down in person with a printed profit and loss statement from their business for the year before and the year to date, and we would comb through it together. And this is kind of a weird thing to track, but I want to say it was an 88% cry rate during that session from clients, not me. I was not crying. From clients, because it's really vulnerable. And sometimes they were tears of relief. I'm just glad that I finally looked at this and I could look at this. It's okay to do and it's not as scary. But we need to know your numbers. Few basic things that we need to know. We need to know top line revenue. We need to know net profit. We need to know your labor costs. And we need to overall know the expenses that you have committed your business to. That's going to give us enough information for planning steps forward, whether that's growing a management team, whether that is, knowing if you're overpaying, how much can you pay yourself, what your tax liability is going to be. Those things give us that level of clarity. Third tip that I have for you, this is a tactical one. So I recommend that at a minimum, a business has 3 separate bank accounts. So this is at least how I do my banking. I have an operations account. That's where the money flows in and also flows out for expenses and payroll. I have a business savings account. That is money that I am ideally not touching. That's just savings. And then I have a business savings account for taxes. When money comes in, I then disperse a certain amount into savings and then a certain amount into the tax account, and then the operations account, I just let do its thing. I have found that to be a really helpful system for money management. Specifically, I really encourage companies to separate out tax savings and business savings because, and maybe this is a personal thing to me, but I do think about money management a lot. I work with clients on it a lot. There's something so defeating about working so hard to save money just to pay it out to taxes. And something about having it in a separate bank account where it's like, that's not mine. That's fake money. I'm not going to keep any of that. Every penny is getting paid out. Now, it's a nice surprise if it doesn't, but we want to save on the conservative side of what we think we'll need. That's going to be really, really important. So I recommend 3 bank accounts, your operations account, savings, and tax savings. This 4th tip rolls straight into the bank account system. I recommend that you have a set amount that you have committed to always transferring from your operations account into savings and that you plan for that. We can start really, really small if we need to. It can be $50 a week, $25 a week. But having that regular practice, this is something I actually started doing when I got my first job, is I went to the bank and set up an automatic transfer. It happened every 2 weeks when I got paid of a certain amount into a savings account that I just pretended did not exist. And that's actually how I bought my first home, was having access to that savings account that I had just been letting accrue for, gosh, at that point, probably a decade, which was really neat. It builds up really quickly, even if we start small. And when we set it up for an auto transfer, it just happens. We naturally will start to plan around that money leaving the account. So my challenge to you, and honestly, if this is the only thing you take today that's going to serve you well, pick an amount that you can start with and just go ahead and set that up. It may be a couple a little tricky for the first month or two while you're kind of getting your cash flow regulated, but make it a practice you're committing to moving forward. Number 5. Okay, so this was financial advice that I got when I had my first business, and it was so, so helpful for me, and I still use it today. So basically, to create a category in your business where I don't have as many limits around what I spend, and then everything else you're incredibly conservative on. So we're going to be really careful with your labor. We're going to really critically look at your marketing expenses, for example. But maybe education is something you spend more freely on. It's your investment category. That's what I was looking for. Have an investment category. Now, this also could be a category of, like, it doesn't have to be education. It doesn't have to be like investing back into you. But the idea is that we have one area in your business where we feel less constricted. So, for example, the first 2 years of my business, it was a brand new business. I was not rolling in it. Money was tight. So when it came to this category, I said, okay, I'm not in a place yet where I can drop hundreds or thousands of dollars on like a free spend category. But what is important to me is educating myself. And what I can afford to do in this season is to buy a book a week. This background is of my office, but I have done a lot of content from my office at home, and you may have seen I have this huge bookshelf with all these books on it. And that actually was predominantly built up from the first 2 years of my business, where that was my free spend category. I gave myself a no guilt pass on buying books. It fit the season that I was in. Later, that transitioned to investing in coaching and programs. And I would say that's still the free spend category for me now. That's an area that I want more freedom, so I plan for it. So have an area like that in your business, because the other thing that does, there's a money mindset I've noticed that we're all have a propensity towards. I believe we all do. And that is when we get overwhelmed or anxious or stressed, or we feel in over our heads, there can be this temptation to kind of just YOLO, you only live once. I'll just figure it out. Let's just do the thing. That can get us in hot water pretty quickly. So I have found it most productive if I have an area where I don't feel constricted. I tend to feel more okay with areas that I'm applying a lot of boundaries and discipline. Tip number 6, this is going to be a hard one, but bear with me. When it comes to employment and your labor costs, what people make is for sure important. It is just a reality that money is something we all need. And I will give you an and here. You need to break the belief that money is the only thing people care about with their job, because it isn't. And I have noticed that sometimes maybe a key staff member is going to leave, or we're afraid for our retention. There's this temptation to just throw money at it. Oh, well, I'll just give people raises. Maybe that'll keep them. I'll just add in mileage. And Joey Coleman posted a statistic in his book, Never Lose an Employee Again. A little plug for the DogCo Summit. Joey Coleman will be doing a 4-hour workshop on employee retention, which does save you a lot of money when you keep people. So I advise you to attend that, whether digitally or in person. Joey Coleman had a statistic in that book that less than 10% of people leave a job because of pay. It may be the thing that attracts them in initially, but it's rarely the thing that keeps people. Those are going to be things like culture, and do they feel valued, and do they have opportunity, and are they appreciated, and is it a good place to work? Do they like their coworkers? Do they like their boss? Those are really, really strong ties to a position. So if you do have a tendency, especially with labor, because that is going to be your biggest cost in this business model, if you have a tendency to just throw money at things when you feel nervous or insecure, you're trying to fix it, we need to break that pattern of behavior, because that does not serve you long term, nor do I believe that actually fixes the problem. Number 7, I hope this is helpful. I'm enjoying this. I love talking about this kind of stuff. Number 7, we need to be willing to make changes when we fluff up, as they say. I'll keep this PG. No one is perfect at money management. Literally no one. Everybody who is listening to this who is hired has at some point hired somebody that they shouldn't have, just based off of the numbers. If you are listening to this at some point, if you have a team, everybody here has been afraid about making payroll, or afraid about paying yourself or felt guilt over what you can afford to pay people. There's a lot of emotion around money. And as we've talked about, the tendency there can be to hide our head in the sand. It serves you so well to adopt this belief of when I see it, I need to fix it. And to force this clarifying mindset into the way you approach numbers. I'm going to look for clarity. I'm going to make sure that I really see what the problem is. And when I see it, I am going to address it. That, and especially when I see that I have made a mistake. I think particularly the people aspect of this can be really hard. Everybody I work with, everybody I know in this business cares about their employees very deeply. And so there's something very sad about realizing maybe I can't afford to keep somebody. Maybe I made a mistake here because of my own ignorance and inability. That, we're all learning. We're all trying to get better at this. But if you realize that, then choosing not to address it just continues to make the problem bigger as the business continues to exist. So if we realize that we have made a mistake, we need to address it, we need to fix it, and we just need to commit to being better next time. So that is tip number 7. Tip number 8 is to protect future you when it comes to money. This actually is a mindset I'm trying to adopt broadly across my entire life. It's this conviction to make decisions that prioritize future me rather than current me. If there are things that future me is really happy that I did, those are decisions I try to prioritize. So one thing that I actually started doing this year is I started paying in estimated taxes monthly. I don't know why it never occurred to me that you could do that until my bookkeeper was like, would you feel more in control about this if we just started paying this in monthly? And I was like, why, yes, I would. I would love for this to be on a shorter time cadence. I'd love for not having a surprise estimated quarterly tax assessment. And I think future me especially is really happy about that. She's happy that I paid in more regularly through the year so that tax season is less stressful. There are less surprises and I am more prepared. So that is a mindset that I encourage, especially when it comes to money and also health of, what makes future me happy, what protects future me, what sets future me up for more success. All right, number 9, we're going back to the tactical, and that is to check your finances daily. So this especially applies if you have a fear-shame relationship around money. If you have a tendency, I don't want to log in, I don't want to see it, I'm gonna gently challenge you to start checking your finances daily. Check your bank account daily, check your P&L daily, because what that is going to do is, one, it's going to reduce all the feelings around that. It's exposure therapy. It is, we're just getting in front of it. We're letting it be what it is. We're taking it in. And that's really, really important. I believe that's really important. Can that go a bad way where we get kind of obsessive and maybe we need to stop that practice? Absolutely. But if you have a lot of avoidant tendencies around money, I would recommend that in the morning, log into your bank account, business bank account, you can do personal too, and then log into your bookkeeping software and look at your P&L and just familiarize yourself with it and let it become something that you're okay to look at and ask questions about and understand more deeply, because it is just a tool and we just want to learn how to use it well. All right, my final tip for you is going to sound real nerdy, but it is what it is. And that is to make it fun. So one of the ways that I have dealt with avoidant tendencies with money is that I have a game that I play where every time I log into my bank account, I try and move money into a category that makes me feel good. I'm not talking a lot of money. Some days I move $5 because I'm like, that's what's happening today. We are taking $5. And I also break out all of my accounts. This is deep nerd, but I have a travel account and I have a tax savings account and I have a savings account personal and savings account business. And there's a category I identified recently. I want to remodel my kitchen. I don't have a dishwasher right now, which is not fun. Doesn't even need to be stated. It's just not fun. And so I decided I'm going to open up another bank account for housing renovation. So I can just put a little money here, put a little money there, but I make it a game. That's the point I'm trying to make. I try and reward my brain for making good decisions with money and making it fun. So every time I log into my account, I try and move even the tiniest little bit of money into the accounts that I want to see grow. And that practice, so that's something I've been doing for maybe quite a while now, actually. Maybe 5 years. Yeah, probably around 5 years. And that has been a really helpful thing in my relationship to money because I just enjoy it. Like I enjoy logging into my bank account to see like, okay, what can I do? What can I make happen? So that is my final nerdy tip for you. So I hope this was helpful. I'd love if you're watching this on YouTube or some of the podcast platforms, you can also leave a comment or go to social media, tag me, let me know a money tip that I missed or what your favorite money tip was and something that you're going to take from this episode. Thank you for your time, and I will see you guys next time.